This is David Smith for the Morgan Report. Happy to be here with you today. The markets are very active today, and we're going to have some exciting information to cover right up to date. I've got a few slides this morning that I actually put together within the last hour. We have an opportunity to make massive profits with calculated risks, and I think this is going to be some of the most exciting trading that you're going to see maybe in our lifetimes. Little disclaimer here. Be sure to do your own due diligence. I'm not giving investing advice. I'm giving ideas that I have worked on and that I think work for me and that may work for others. It could help inform you before you make your own decisions. These are the assumptions we'll be covering today, that this is the third inning of a once-in-a-lifetime run in the metals, miners, and blockchain, that proven strategies can put you in the winner's circle over the next few years, that money investors will leave the market too soon and leave a lot of money on the table. Some of them will actually try to get back in near the top. Many more will overstay and give back everything they've accumulated. They'll do a round turn. You can plan ahead to minimize the risk of all this and maximize your gains against this sort of thing happening to you. There are two things that you absolutely cannot afford to lose. Your psychological capital, which will take you out of the game if you have $1 million trading account, but if you are psychologically impaired from overtrading or FOMO situation, you will just drive your capital into the ground. You must maintain speculative investable funds so that you have something to work with. And through this, you must be bold, but you must be right. So you're balancing risk-reward constantly. You're trying to remain calm. Everything has been changing due to COVID. Nothing is really the same. Plus, we were going to have paradigm shifts anyway with the shifts in the metals and miners and green energy and all this. So all of this into the mix makes for a very chaotic situation that we are all striving to remain a certain amount of quietude in as we trade and as we establish enter and exit positions. These are the survival tactics that I think will give you the best chance to get through this, make and keep quite a bit of money, and also keep your sanity. It's important that you make money, not exactly how much. It's okay to sell high and buy back higher. I did this a few days ago on a uranium position that I had. It was my biggest position. I sold a third of it. I realized at the end of the day it was an incorrect thing to do. I bought it back 15% higher the next day. It's 30% higher than that is now. So sometimes you have to suck it up and get back in if you think you've made a mistake. It's important, and this is what I should have done, to be right and sit tight, especially in the early times of a bull run, and not go trading your core positions. We all make these mistakes. I'll keep making them in the future, hopefully less than I did before. The market can stay overbought for a long time, so don't worry too much about that when you see some of these things coming up. Also, don't wait for the market to tell you what to do before you act, because that means a lot of other people have already figured it out, and the profit potential for you and the risk will be increased as the profit potential decreases because of that. There are several free copies that are available to you if you'd like to write into the morganreport.com/myfeereports. I'll be referencing them when I talk today. All you have to do is write in and ask for them. They'll come to you in a PDF form, one that's available just within the last few days that I'll discuss a little bit later. A lot of people are going to be left behind because they waited for clarity before they acted, or they had too many scenarios in mind and they sat there and didn't execute the plan that they had already put together that probably would have worked for them. And hopefully you will not be one of these people. The first thing that David Morgan recommends in the Morgan Report is to get some physical. And that sort of thing is drying up as we talk because more and more people are buying physical, and that should be your insurance. You will probably make money on it, but you're not buying it to make the money. You're buying it to protect your other assets, which will decline in value through inflation, government confiscation, this sort of thing. and chaotic situation in the social structure politically as well, whereas buying some metal and holding on to it will be your lifeboat. It's saved people's lives literally in the past. Over thousands of years, it will do it in again. So acquire some physical, avoid the designer coins, avoid the graded coins, get physical close to the spot price as you can. Here's how tiny the gold mining industry is compared even to Facebook and Amazon, and certainly compared to the debt outstanding of the Treasury. So you can see, as Doug Casey likes to say, when people rush into this industry, which they're starting to do now, it'll be like trying to squeeze the contents of the Hoover Dam through a garden hose. We're already seeing some of that as some of these stocks jump massively from day to day. And they also have volatility, so they can drop a lot too, not for any particular reason. So you don't want to be scared out of your positions. Research properly, take positions that make sense to you in your circumstance, and hang on with your core. Here you can see something that I think a lot of people are missing. A lot of money being put into circulation doesn't necessarily cause inflation. It's how fast the money turns. It's velocity. We're starting to see velocity where people are spending their money not because they want to, but because they have to. And food prices are starting to go up along with a lot of other things. People are starting to realize that, and this is what's going to cause inflation to rise, I believe, much faster and much more profoundly than what the market believes right now. They're just starting to get a hint of that, and that's why gold and silver are making new intermediate highs as we speak. The Canadian advantage, about 2/3 of the mining stocks start out as Canadian companies. And so the Canadians have a certain advantage in getting this information ahead of people, say, in Europe or in the United States. But it's still available. You just need to know where to look for it and how to access it. Hopefully, the brokerage firm that you have will enable you to trade Canadian stocks. Sometimes you can buy them before they get a U.S. listing. I've done that half a dozen times this year alone. Most of the ones that I bought are up substantially, and then I added more when they got a U.S. listing. I've learned this the hard way by missing one of the biggest runs in my career about 15 years ago, which was Uranium, which went from 55 cents to $42. I was looking to buy it at under $1, but didn't think I could buy it if it was not listed on the U.S. exchange. I've since learned from that mistake, and I'm now applying that in my trading. The thing is to copy what others are doing, not just to buy their stocks, but learn how they think. And if you can do that, you can end up becoming just as successful as they are in their own rights by learning how to spot some of these companies before the rest of the market does, take a position when it's quiet, and then sell into a big profit. I would suggest that you Google Eric Sprott and Mark O.D. to find two people who, in their own way, are massively successful because of the way they think, the way they plan, the way they act. Again, learn how they think, not just try to learn what they buy. David Morgan and I co-authored this book, Second Chance, How to Make and Keep Money from it's in play now, motherlode of all gold and silver shockwaves. We're in this opportunity now. It's still a bit early days, but this book tells you not only how to make the big money, but to keep it. I don't know of any other book that does this. It accords with human nature so that you don't give it all back at the end, which many people will. The idea is for you to reach a place where your mind is like the water, misu no kokoro, the Japanese call it, where the reflection of the market is reflected in your attitude and your ability to execute, and so that you do so with a minimal amount of emotion. When you execute, do so like Miyamoto Musashi, Japan's sword saint. Think only of the cut. Try to get as much emotion as possible out of your trading. You never get all of it out, none of us do, but don't do the fear of missing out, the FOMO situation. When you find yourself getting into that mode, like if you're chasing Bitcoin this morning, step back and ask yourself, is this going to help me out, or am I buying just before a big break. I believe that the supply-demand, what I call the subduction zone for the metals, especially gold, silver, and copper, and now even base metals with the green revolution of electric vehicles, with nickel, and don't forget that uranium is a metal. All of these are going to move into a bull market that will start with the gold and silver, but eventually it's going to be synchronized with the base metals. And it's not going to take 5 years to happen. It's going to flow, I think, more quickly than most people believe. In the volcanic subduction zone, you have a certain part of a plate thrusting underneath the other plate, creating great tension. And so this top plate is what I would call conceptually supply, but the demand is thrusting underneath it, creating tension, and eventually will cause a price explosion as supply dries up and demand overwhelms it. You can see silver, what's happened to silver over the years. The yield at the head grade is down 50% in the top primary silver producing mines, of which there are less than 2 dozen globally, because most silver comes from base metal production of copper, zinc, and lead. But the yields are dropping, so they're digging more ore out of the ground in order to get the same amount of silver. And you can see the Asian silver demand vacuum cleaner, which has kept sucking up the silver and the gold in spite of COVID this year. As Dr. Peter McGaugh, one of the sharpest tools in the silver shed, talks about it, when the price of silver moves, you can't ratchet up production from the world's largest mines. The only place to pick it up on the slack side is in the few primary silver mines, which will quickly be overwhelmed as this massive bull run gets underway. Here's what's happened the last few years. Silver yields have been declining across the globe, even as industrial and investment demand has been surging. Here's some ratios for gold and silver. If we see a 60-to-1 ratio for $10,000 gold, we could see $166 per ounce silver. 50-to-1, $200 per ounce. Even if you divide these numbers in half and you talk $5,000 gold, we could see very, very high prices, all-time highs in the 3 digits, which I think, and which David Morgan also believes, we will see $100 plus silver before this run is over, perhaps substantially beyond that. Here are prices taken this morning. You can see the huge move up, still within a massive congestion range, but indicating that silver and gold may be attempting to break out into new highs from where they've traded over the last 4 or 5 months. This may or may not be successful in December, but it indicates that you don't want to be left behind, and a move above $26 silver would indicate a possibility, if not a probability, of a breakout above $30 silver. Once this happens, we could see another $8 to $10 on the silver price in very short order into early next year. Here's what I call the Bitcoinization of the silver supply. This is a conceptual idea. Bitcoin was not supposed to trade above 20,000 for quite a while. All of a sudden, it's at 22,000. It's actually around 23,000 as I'm speaking this morning. All this happened, $3,000 a Bitcoin has happened within the last couple of weeks. It turns out that all the Bitcoin that's being mined at about 900 coins a day by the miners has been sucked up by just 2 companies. That means that any Bitcoin bought has to be bought from somebody else that already owns it. I think a similar thing is going to happen to silver in the demand as the investors suck up what is out there, and then the price is going to rocket higher. You can see what happened this morning. German retailers are seeing a run on gold and silver just because of an announced nationwide shutdown due to COVID. All sorts of reasons are going to startle people into buying more gold and silver as the premiums rise, the supply decreases, and the prices rise for the metal. I call $26 to $49 silver volcanic tremors. That's what we're seeing right now. When silver gets above $50, we're going to see a pyroclastic eruption, just like Mount St. Helens exploded, not from the top, but blew out the side of the mountain, covering several states in ash and killing the number of people that didn't expect a sideways explosion. This is what's going to happen to silver. It's going to explode above $50. I wrote this article last week. It's posted on Money Metals. You can, if you don't know about crossing the Rubicon, what that means, you can read this article. It's available free from the Morgan Report. And that link didn't get finished out. It should be the morganreport.com. And you can also Google what crossing the Rubicon means. It's a point beyond which you cannot return. And I think silver is set to do this, perhaps not in the next week, but sometime soon, perhaps sooner than we think, possibly as early as next year. When those price points are exceeded, silver will not be going back to a lower price that we've seen for many, many years anytime soon. Here is what Morris Hubbard has indicated, the cup and handle formation, a very reliable, takes a long time to form, set up for gold, which targets $4,000 gold and probably substantially higher than that over time. Here we have the difference between the gold that we can see put into ETFs and the gold that is going into other areas such as holes in the ground. And we need to figure out where that's going. I can tell you one thing, that's going to be sticky gold. It's not going to be turned around and sold into the market anytime soon. This is one of 3 mining stock investment tailwinds that I believe will give people outsized gains in relationship to what they have done in the past in mining stocks, which have underperformed gold for a number of years. They are now breaking out, and mining stocks should outperform gold due to the fact that they are riskier, and that's exactly what they're doing. So you accept greater risk in order to get greater returns. That's not been the case for a long time, but now that's changing, and I believe will continue to change in a big way. Here you see another gap within this concept. The juniors have been underperforming the seniors. That's hugely the case, and normally they move fairly close together. So if you buy a quality junior mining producer over the next couple years, I believe you will make substantially more on a percentage basis on your money than buying a quality senior. You will accept a little more risk to do that, but the potential reward is greater. Here you have the spot gold ratio versus the miner X. Look how out of kilter it is. Arguably, it's been out of kilter for 48 years. It's now going to change. Look how long it took for this bear market to work itself out from 2011 into the false start in 2016 and finally died a death here in late 2018. We're now in a new bull run for the metals and miners. This is the most asymmetric gold stocks versus gold trade of our lifetime. You do not want to miss it. Here we are just getting started. You can see the little yellow line there. We got a long ways to go in terms of time and potential profit. Do not make the mistake that many people did with palladium, and I actually made this mistake too. When you can see here in 2018, when it drove above $1,000 for the first time in 19 years and then dropped, everybody thought, myself included, that that would probably be it. That was the end of the bull market in palladium. After feeling like a hero for a while, I realized I'd made a big mistake when it went up to $1,200 and then shot up to $2,800. Even today, it's still around $2,300. I think a similar thing is going to happen to silver. You can choose the price point. At some point, we'll think the top is in. It might be $100. It might be $150. It might be $200. It'll drop to $150 or $140. Everybody will see about selling out, and then it'll rise to $300. I think that sort of thing is very possible with silver. The same concept that we saw with palladium. Try not to let that happen to you. Our book helps you to avoid that sort of thing with what we call the sacrifice throw portfolio in our Second Chance book. David Morgan has stated and done research that as much as 90% of the profit potential comes during the last 10% in time of the bull run. Do not forget this as we get into these stratospheric prices. This was stated by Incrementum, and you need to remember it. When you think it's all over, the trend will probably run another 9 months and double the price from where it is. You want to capture at least some of that. Don't be left standing at the curb completely sold out. There's a way to avoid it. And also, you don't want to be standing there completely all in either. You need to find that balance to capture as much profit and hold on to it as possible. This is something that changed my thinking in one of the biggest ways in recent years when I listened to a rare interview by Peter Groskopf of CEO Sprott. He mentioned something that I knew about but hadn't thought about it in the way he said it. We all are aware of the Pareto principle, where with any task, 20% of your effort will give you 80% of the returns. This can also be applied to the mining stock. After he said this, I went back and looked at my own stocks that I had, and sure enough, about 20% of the ones that I held out of about 25 or 30 stocks were the ones that were doing the best for me and that I believe would give me the biggest returns. Now, I approach this differently than some people would because I was willing to accept more risk. I actually overweighted the ones that I thought were going to be by 20%ers by the Pareto principle positioning, and those things are up largely for me now beyond anything else that I have. So I believe that this is going to supercharge my profits. You might want to approach it a different way, but consider that most of your stocks will not give you the majority of the gains. A few will. Try to identify them carefully and carefully hold on to them as core positions so that you maximize your potential gains. I have an article I wrote for Prospector News a couple of months ago, 4 best-of-breed mining geologists. You can follow their work by getting into their head and seeing their thinking, not necessarily what they're buying, but how they approach it. And that can help you become a very increasingly successful trader. This is also available to you as a free report from the Morgan Report. I've got a uranium campaign, which I wrote about for the Morgan Report last spring. It now seems to be being activated over the last couple of weeks. I'm approaching it differently than some people might, and some of our subscribers may or may not have decided to do it the same way. I look at it as a secondary focus. My primary focus will remain the gold, silver, and mining stocks, but I also believe a fair amount of money can be made in uranium after this huge bear market, which has taken out companies to the point that there were 600 companies at the end of the 2011 bull run in uranium. There are now only a few dozen, and that means that you have a good chance of picking a few that will be good companies. Almost all of them should do well, but some will do extremely well. I've chosen just a handful, 3 or 4 companies and situations that I have put a certain amount of, quote, small money in, and I don't expect this market to last as long as the last one. I could be wrong, but I'm not going to be there anyway. I'm going to play the boom phase where the initial convulsive run to an intermediate top takes place. It could be $90 uranium, it could be $120, it could be $60. Wherever I think the easy money is being made, I'm going to sell most of my stocks into that huge rise, into big strength. I'm going to hold a small position for the possibility of being wrong and have it go up a lot more than I thought. And this is discussed fully in the STP portfolio in our Second Chance book. I've also been able to make some of these positions pay by doing a little bit of trading, and now I'm sitting tight as some of my best trades are going up by very large percentages almost on a daily basis. Here you can see a tell that gave us an indication that the bull run was getting ready to start in uranium late this year or early next year, because the spot price is moving above the long-term uranium price that the users pay to make sure they have enough uranium for their units. And I think that with Kazatomprom and with Cameco being the 2 biggest sellers of physical uranium going into the market to buy for their own needs, this is a very important tell that indicates that the uranium market is becoming very unstable in terms of a supply-demand situation, and that we could see very, very strong upside in the quality choices after you've done your own due diligence by putting small money in to make big money, an asymmetric trade. I hold two of these companies that are discussed here, Encore Energy and EnviroLeach, and I believe that these are two very strong players in this market, especially the Encore Energy, which is recovery of uranium. EnviroLeach is recovery of e-waste products. Both of these, I believe, are set to change the landscape for these concepts, and you might want to look into them. I do hold both of them. There's another major thing that's going on right as we're discussing, and that is that there are almost 3 billion people that are unbanked. They don't have a bank account, and that doesn't bother them because they use their cell phone for their bank account, and we're having a massive change to blockchain technology, which means you may not need a bank account in the future, certainly not in the traditional way that we have been seeing this sort of thing take place, where you have a bank account that now pays almost no interest, charges you a lot of bank fees, is able to literally keep you from getting your money out if you want it, if they decide that they have a bank run and they let you take out a small amount every month. They charge you a lot of fees. They take a long time to do anything. Blockchain is changing all of that. There are perhaps as many as 80 to 100 attempts to digitalize gold and silver on the blockchain. There are two that I feel have enormous potential. We've reported on the Sprott Vault Chain Gold and Silver in earlier reports last year and early this year for the Morgan Report readers. This is a very different product from the one that we've also followed. It has its own advantages and disadvantages. We're following one that we have been exponents of for almost 4 years, and that is the Lode Cryptographic Silver and now Gold project that digitalizes gold and silver and puts it on cryptographic coins and tokens. They can be owned, they can be held, they can be spent. And this company is now de-risking itself massively by getting all sorts of approval through different regulatory agencies, including the United States, to expand its operations. It's something that we believe in. We are holders of it. We were early investors, and we are continuing to invest in this concept. And I could be wrong on this, but here's my view. I think that's one of the things that is going to happen is that the silver physical is going to dry up to the point that people wanting to get silver to not necessarily just spend it, but they can, but hold it, are going to be forced into a digital space like the Lode project to purchase digital silver and have it stored in a vault securely in different places in the world for them until they decide to redeem it or spend it, and do it in a way that also has a premium that makes sense. Right now, the physical supply is drying up for traditional sources, and I think at some point, this type of a concept could be one of the last remaining and most durable ways for people to acquire silver and have it back digitally. Private, high-speed, peer-to-peer, silver, gold, and money for everyone. Literally anywhere in the world, potentially, this is going to become available. I believe that we have a series of things going on that are concomitant with each other, and they blend into each other in ways that are going to cause massive price explosions for gold, silver, and miners, for the blockchain concept. And we have everybody in the world looking at this at the same time. This has never happened simultaneously before. It's going to mean prices that we cannot even predict. It's going to mean volatility that's massive, that if you're not careful and you try to do leverage, could take you out. You need to be careful. It offers so much potential that is asymmetric in all of these respects. You don't need to put your house mortgage into any of these things to make a lot of money. You need to put a small money in after carefully researching a concept and then hang on and then don't overstay your welcome, because these cycles could end up being shorter than we expect. And David Morgan has told his readers he's very good at picking tops, not so good at picking bottoms. He's going to tell his readers when he believes it's time to get out of gold, silver, and the miners. That's probably several years out, but that's one of the many benefits of being a subscriber to the Morgan Report. This is going to be put into hyperdrive by digitalized gold and silver and by blockchain enabled banks, which are changing finances across the board, how to send money, how to store it, and you need to owe it to yourself to become conversant on these concepts. Gold and silver is being reestablished as honest money. This is going to cause a demand factor, I believe, the third tailwind for gold and silver, which is going to suck up a lot of physical demand and cause the mining shares, which will become massively more profitable, to do moonshots in their own right. Here is what I would suggest that you look at some of these things. Look at Raoul Paul's Real Vision. He has a lot of free content here. You can become a subscriber as well. Learn about the blockchain space because it's changing everything. You can't just turn it on tomorrow and become a blockchain expert. You need to spend a lot of time learning about it. It's a layered information process, which some of us have been going through for years and we continue to do. Read George Gilder's book, how it's going to change things that are stable today. Make sure that you understand these concepts. Look at this. There are many good documentaries on blockchain and Bitcoin, and anything that's not Bitcoin is called an altcoin. Learn about these things and see about getting your feet wet. We're going to profile a blockchain-enabled bank next month in the Morgan Report, where you can actually place US dollars or British pounds or Japanese yen into a regular bank account, turn it into their stable coin, and they will pay you interest in any way that you would like. Bitcoin, Ethereum, US dollars, if you're naive. And instead of getting a fraction of a percent a year, you can be making good percentage in being paid in something that is an appreciating asset, such as Bitcoin or Ethereum. So this will be a very exciting addition to our reader understanding base coming up in the next month or so. And we're going to interview a couple people who brought this revolutionary change out to make it available for all of us. Copper is going to be into a massive, massive bull market going forward. The EV revolution and the energy, the green energy, is going to demand massive amounts of copper, nickel, etc., silver as well. And this is a huge, huge deposit that is being delineated out in Ecuador. Look at the quality of this copper. It doesn't even need to be sent to a smelter. It can actually be processed into copper plate in situ. This is one of several big projects that could redefine the copper supply-demand situation, which is not going to be addressed for a number of years. But these projects are some of the very few that have a chance to make investors a lot of money if they invest wisely. You can see what the Morgan Report has to offer by going to either David's subscriber base at themorganreport.com or a free weekly letter that he writes, and find out how you can become involved. I've been working with David now for almost 2 decades. I'm privileged and proud to be doing there. I think we offer as much, if not more, benefit for subscribers than anybody out there, and we really, really want to do the best we can for you. You can get involved with this by going right to your cell phone and doing these types of things to get an idea of what the Morgan Report has to offer. I hope this has been beneficial for you. You know, you don't need to stay in for the whole time that this goes on. I knew a Canadian sandwich trader who bought silver at $11 in 1979 and sold it at $18 when his charts experienced a failure. He made millions of dollars and never gave away a penny of that. He kept it all. So I'm sure he might have wished he'd stayed longer, but the point is he didn't overstay his welcome. He didn't ride at the 50 and down to $5, which is where it went some years later. So don't be greedy. but be conversant about getting knowledgeable and learn how to make big money and keep it as we move into something that can make life-altering changes for you with a certain amount of risk. You have to accept the risk. If you aren't willing to accept the risk, you cannot achieve the reward. Just try to make them balance each other out a little bit as best you can. And learn from this by following the 321 memory law, where you don't wait 2 weeks to think about what you've learned today, but you've hopefully taken some notes, you've done some research, you've looked at a couple of companies that I mentioned that may intrigue you. These are your own responsibility. And then when you found them out, that you put a certain amount in. You don't go whole hog on any particular one, even though you think it's a guarantee. And if you do that, if you're careful and you adjust your plan to your own circumstances, risk, reward, emotional stability, and financial ability, things like this, you can become in a situation where you make life-altering changes financially on the upside while you migrate carefully through the massive, massive risks that all of us are going to have to be facing in the coming years, because those rewards are out there. And I wish that every one of you are able to maximize exactly what you're able to accomplish. I'm going to be trying to doing the same thing for myself. So thank you very, very much. I've really enjoyed speaking with you today. I believe there may be a little time for Q&A. I'll be happy to try to answer some questions for you. This has been David Smith for the Morgan Report. Thank you for having me on and giving me the opportunity to speak with you today.
Thank you so much, David. Great presentation. We have a couple of questions. Kenneth asking, can you show the slide of the mobile number again? Thank you.
So, show which slide?
With the mobile number.
The Morgan Report slide?
Kenneth, what number are you talking about?
What was the topic about on the slide?
Mobile telephone.
Oh, okay. Let me see here. You know, this is being recorded, I believe, and I think your audience will have an opportunity to access this whole presentation, correct?
Yes, correct.
All right. I'll try not to spin people's heads here. I think this is the one you're talking about, the digital gold and silver. And this go to load.one or agxpay.com to learn more about that. They're actually doing, they're going to be doing a bond raise here very soon for people, and you might want to look into that as well too. Do you have another question?
Yeah, sure. Leon asking, do you think NAC will ever be permitted?
Do I think what?
NAC will ever be permitted?
That would be the Pebble deposit in Alaska. This is my opinion, and I could be wrong, but my opinion is based upon the fact that mining companies are so involved in what's called ESG, environmental social guidance, and it's getting more and more difficult to permit a deposit in an area of the world that has other issues with it, whether social issues, whether environmental issues. Pebble has been an uphill battle for a number of years because it's located in Bristol Bay, near, actually above the sockeye spawning ground of the world's largest sockeye spawning ground of a number of different rivers. It has massive amounts of relatively low-grade gold and silver and PGMs in it. It's questionable how that would affect the environment. I think the odds are against it. Nothing is ever 100%, but for my money, I would look for places that don't have the environmental issues that really trigger people that Bristol Bay does. I mean, you can look at places in Chile, for example, for copper deposits that are not near rivers. They do have a shortage of water for working the deposits, but there are permitted deposits in British Columbia for copper, for example, or ones that are near permitting that don't have that kind of an issue. So it just depends on how the individual looks at what might happen here. And I think that Pebble is a long shot, and it would be a mine on the scale of Grasberg in Indonesia. It would be probably be run for over a century with tailings dams and all the issues that that implies. Whether or not that could be safely done for 100 years, I honestly don't know. So I think the people that want to put it into production are well-meaning, but they really have a lot of things that they're going to have to overcome if they want to have a real shot of bringing that into production. I hope that gives you some kind of an answer.
Thank you. Can us that are not US citizens can do all of this?
U.S. citizens can do just about everything I discussed here. For example, I talked a little bit earlier about the Canadian mining stocks. I can tell you for a fact that this year I have bought 4 different Canadian mining companies before they became available on a U.S. exchange. I bought them on the TSX. My brokerage account, which I have at Ameritrade, enabled me to get on the phone and buy it, with a limit price. They put it into my account as a .cn stock, and those stocks have all become OTC listed stocks now, and so I accepted the bigger bid-ask spread to get involved with them. I'd done the research, and they are now in my account as OTC stocks. Not all brokerage firms enable you to do that, but if yours doesn't, I think you should get one that does, because it really gives you an opportunity if you do your own original research. And the Morgan Report has brought a couple of these companies to our readers' attention before hardly anyone in the U.S. knew about them, and they were able to go research them and go to their website and whatnot, and take a position in. And now they have good profits for companies that should go up even more from where they are. So if you learn how to walk the ropes, you can do this legally and without a great risk, but always go in and out with limit prices, whether you buy on the OTC or on the TSX.
The other question is, do you have any juniors that you like in Nevada?
I'm really hesitant to give out names, not because we're trying to keep everything a big secret, but I don't want people to overcommit based upon something that I think might work that might not. But let me say this, David Morgan, and I subscribe to this completely. We have a 3-tiered situation in our report. We have an asset allocation table, majors, juniors, and which juniors are being pretty much producers, and speculations. And the seniors are the big companies that produce a lot. The risk is relatively muted, but so the reward might be a little bit less than the junior. You accept a little bit more reward. They're producers. They need to grow their resources. The speculation plays, we recommend that you put a little bit in each one if you're going to get involved. Put small money in for the possibility of making big money. Now, sometimes we choose to put a fair amount into a play that we think has a lot of potential, but that's us. You can do that too, but we don't recommend it, but you can, and that's one of the ways to make an outside return if you want to accept an outsized risk. And so it's up to the individual, and we're all responsible for the decisions that we make. I will say this, you can go to YouTube and you can see a lot of companies coming out there now that are raising money for their projects, and there's a lot of them you've never heard before of too. I would try to stick with companies, the exploration companies that have been around for a while, that have showed progress, that are increasing their resource and their reserves. And some of these ones that just got started, unless it's a name that's been out there and be successful before, like a Ross Beatty or a Dr. Peter McGaw or someone like that that's done it before and will probably do it again, you might want to avoid somebody that you've never heard of before, or someone like Dr. Quentin Henning, who's done it a number of times, or someone like the people that backed the oxygen.com. They've put 4 mines into production, which is a very unusual feat, and they're working on a couple more. So find ones that they are working on that are relatively unknown, and that's where some very large profit potential can occur.
Do you talk more in your report about the digitization of metals? Sorry for my Ukrainian
Yes, we
English.
do. About 2 years ago, we started a blockchain brief column, which we update every month with current information, with ideas, with interviews, with links. And the idea is to inform our readers about the blockchain space because it is and will change everything. We do not see, for example, Bitcoin competing directly with gold or silver. We don't think they're going to replace each other. We think that they are companions in a massive paradigm shift that's going to bring honest money back into circulation, even as the central banks seek to destroy the ability of people to have privacy and to have fiat money, which they are out and out stating that they want to make worth less and less every year. And so what blockchain is doing is enabling the ability for people to have a different option to digitalize their gold and silver. It's giving them an opportunity to go to banks that trade in digital coins, and it's a new area. But these are getting regulatory approval, the better ones. And if you go and study these things and look at the links that are provided, you can inform yourself. We learn more every month, and so do our readers. And we just last month added 2 altcoins and a digital mining company to our asset allocation tables. We've never done that before. And we profile companies that we don't add, and it doesn't mean that you shouldn't consider buying them if you like them. I own several in my own account that are not in our tables. We don't try to list everything out there that could be really good because it would be too unwieldy. You can't hold 50 or 100 stocks and keep track of them. So we try to find the ones that we feel the best ones for our readership that make the most sense. And they're going to, they're doing very well, most of them. And as Doug Casey says, you can't kiss all the girls. So there are others that we don't talk about or that we do talk about and don't list that can do very, very well. But we have ones that we think give you a really good shot to do well in their own right. And David Morgan has profiled more exploration plays that became miners, producing miners, than anyone else in the sector. So that can help you avoid some of the pitfalls of buying ones that don't hunt, and yet at the same time getting an idea to do further research on ones that intrigue you.
Thank you, and I have to pick the last question for today because we are running out of time and GoToWebinar are going to be automatically shut it down. So the last question would be, could you please clarify more about the offer? It's just to subscribe to the report, or how they can participate in the investment ideas? Trader asking.
Now this is for the Morgan Report?
Yeah.
Yes, they can go to themorganreport.com and see if they'd like to subscribe to David's letter. There are 2 levels. There are the premium level and the mastermind level. And he also has a consulting level. They can also subscribe to his weekly report and there's a link there for that as well too, which is free. We have a lot of people who start out with the free letter and they go, you know what, this makes a lot of sense. I want to become a subscriber. So that's a way to go at it too. David presents, and I do too. David has a lot of presentations on different conferences like the one here that I'm at today. David has presented for you too, David Morgan, on your show before. And these oftentimes are put on YouTube, and some of these are posted on our own site. So this is a really good way to get a content-rich environment for the individual and have them come up with a plan that works for them and then execute it based upon what's going on. And we think this is the best time that you could ever get involved for what's going on. And right now is a good time to be doing it.